Quite a lot needs to be done in the industry. We're still talking about developments in the energy markets, and as I mentioned at the beginning of the program, or at the beginning of this particular segment, we'll be focusing on the results that came in from Seplat Petroleum Development Company for the full year 2016. Pabina Yinkire, who is the Director Institutional Sales at Vetiva Capital Management, joins me now on the program. Good morning to you, Pabina.
Good morning.
It's great to have you join me on the program. So, taking a look at the results from Seplat yesterday, what was your initial reaction?
The numbers were not really surprising because if you recall, in 2016, Seplat was plagued with a major problem, which was the closure of the Forcados terminal, which is their main export route. Before the closure of Forcados, Seplat produced their own working interest production was around 52,000 barrels a day, and from the impact of the Forcados, which pretty much exports close to about 90% of their production, production was significantly affected. However, we've seen the company do some sort of ingenious things. What they did was to use the Warri refinery as an alternative export route. So the Warri refinery is an import terminal. What Seplat did was to do a little engineering work to convert it to an export terminal. So they've been exporting in barges from that Warri terminal, and it has helped cushion production, but not to the levels that they were before Forcados. But of course, we like the ingenuity that management has shown in this respect.
But then in terms of ingenuity as well, the Seplat is still targeting May for the completion of work on its first jetty, and the second jetty is expected to become fully operational afterwards. So that means that we're expecting to see more production coming for these guys. But then how are investors reacting to what generally, apparently there's no dividend payout from the company for the full year 2016. So that's already one negative for the investors or shareholders for the company. But in terms of how they're expanding their operations, what do you think of it?
We think it is quite positive at the moment. What they are doing is to have various export options. In fact, at the conference call yesterday we had with management, they did disclose that they are also working on a export route through the Escravos export terminal in conjunction with the NNPC. So by the time management guided us to a Q2 completion for that project, and if we place the likely return of Forcados around that same quarter, let's say in the third quarter, Seplat could have pretty much 3 export options. So that pretty much de-risked the situation we saw in 2016. So I think overall, from an operational perspective, it is quite positive. Dividends are not the big issue for investors at the moment. Investors just want to see how well production can come back up on stream, and how well the company can manage costs and still return decent to shareholders during this period of low oil prices.
But then it also seems as if they didn't have so much of FX issues as compared to other oil and gas companies in the upstream sector.
Well, for Seplat, a weakness in the Naira is positive for the company because they do earn in foreign currency. However, they reported some FX losses, I would say, and this is primarily due to some Naira balances they had with the NPDC, with their JV partner. So it's, but for Seplat generally, any weakness in the currency is positive for their Naira translation, as you can see. So not a big issue for a company like Seplat.
Okay, so putting Seplat in the mix and taking a look at some of the other oil and gas companies, especially those that play in the same category as Seplat, for instance, Total, the markets are still waiting for Total to turn in its own full year 2016. How do you think that is going to look like?
When you refer to Total, you're referring to the downstream business,
business.
You mean, I suppose?
Yes.
Okay, Total has actually announced their results. They announced a couple of weeks ago. The results were good. For the downstream players, I think a big issue is the liberalization of the PMS market in Q2. That was a real driver of the strong performances we saw across board. Profits were up to record levels for the likes of Total and Mobil, like we haven't seen before. But for Seplat, what the key underlying story for Seplat is their strong oil production, and their gas business is another important part that I don't think the market has fully appreciated. Seplat today is the largest supplier of gas to the domestic power stations in the country. Their capacity today can provide close to 30% of Nigeria's power output, so it's quite significant, you know. So they've also recently increased their gas capacity from 300 million scf to 525. So that in itself is a good thing. I think Seplat is positioned to tap into the growth and development in the Nigeria power sector, besides their strong liquids business. So we like Seplat, we like the business model, a well-run company, and I think it is one investor should watch out for.
Pabina, thanks, of course, for the correction on Total. Of course, Total released its result a few weeks back, and the markets have been reacting accordingly to it. But as we're going to the second quarter, this is the last day for the first quarter. What's your expectation for how investors will play around oil and gas stocks?
I mean, for oil and gas stocks, people will begin to look beyond the 2016 performance and what kind of performance and operating environment to expect in 2017. For the downstream businesses, it's not going to be particularly great here, because as you can see, since the liberalization of PMS, we have had two significant things happen. One, the oil price has gone up from the lows we saw in 2016. It's averaging about 50 today. And then the exchange rate has also depreciated further from when the liberalization was done. So what you find is that the cost of bringing in products to the country is a lot higher. So what it means that margins have eroded. Many downstream businesses are not even importing products today. They rely on the NNPC for supply.
All right.
And with where the selling price is, the margins are not particularly great. So the near-term outlook for that business for the downstream business is not particularly exciting. For the upstream business, it's a mixed bag. We've just been discussing Seplat. What Seplat has going for them is because, one, they haven't produced for so long because of the closure of Forcados. So a return of production, a return of the Forcados terminal will be very, very positive.
All right,
Like
Pabina, sorry to interrupt you here, but let's leave the conversation. Many thanks for joining me on the program and sharing your thoughts.